Starbucks, one of the most successful companies in the world and a very interesting stock. Last Friday I bought some shares for the first time and I made it my second largest position. In this video I will show you why I bought Starbucks stock and also explain to you why I think this is a great company. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about investing. So, Starbucks, founded in 1971, is a coffee house chain that is the largest chain in the world. They sell different kinds of beverage such as tea and coffee, but also cold drinks. Besides their famous drinks, they also serve different kinds of foods. In this chart we see that beverage is the most important revenue segment and that the overall revenue went down in 2020 because of the Roni virus, of course. Starbucks has more than 33,000 stores worldwide. Some of them are company-operated stores, and some of them are licensed stores. In this chart we see that the most of the stores are in the US. Second spot is China, and from there it goes down to different smaller countries. This also means that there are a lot of opportunities in those countries to open more stores, especially if we check Asia. In this chart we see that the total amount of stores per year is increasing. So it means Starbucks really loves to expand. In my opinion, this is a good thing, because you want them to open new stores and expand their business and of course bring in more revenue. But an important note is that you don't want to see the growth only coming from opening new stores. You want every existing store also to increase in revenue. This means an increase in the average ticket and also in a comparable store sales growth. Here we see that in 2020 there was a 20% increase in comparable store sales and a 10% increase in the average ticket. This means the average money a customer spends has increased by 10%. This is done by increasing prices or selling extra things such as brownies, cookies or whatever when people are buying the coffee. An increasing average ticket leads to more revenue with the same amount of customers. So this is a very good sign to me. We also see that Starbucks has achieved a 7% 2-year comparable store sales growth in the US, and in China they achieved a 17% comparable store growth, which is really nice. But it has to be said that according to the numbers we saw and the amount of stores, the growth is in the other parts of the world and not in the US. The total amount of stores is already the biggest in the US, and the growth in same store sales isn't increasing that much in the US. So you have to keep this in mind. Now that we know everything about Starbucks that we should know, it's time to check some fundamentals of the company. But before we dive in the fundamentals, I want to check the historical stock price performance. If we check the year-to-date chart, we see that Starbucks is down 24%. The S&P is down 11%, so Starbucks did fall down twice the amount compared to the S&P 500. For me, the reason why it did fall down big time is because of the valuation. When Starbucks was trading around $120, I think the company was overvalued. And most recently, when all the stocks went down because of fear, the ones that were overvalued might fall down harder than fairly priced stocks. I don't think this is the bottom for Starbucks. They might go down a bit more, but that's not because of fundamentals, but because of everything that is happening in the world right now. If we zoom in on those fundamentals, we see that Starbucks is a 106 billion market cap company with an enterprise value of 126 billion. Right now, Starbucks has a PE ratio of 25, which is fine by me. It depends on the type of company what I think is justified for the PE ratio. When you have a slow growing company, you want a PE ratio around 50. When you have an average growing company, you want a PE ratio around 20. And when you have a fast-growing company, you want this number between 20 and 30. For me, a PE ratio of 25 is the perfect spot for Starbucks. Starbucks has a profit margin of 14.4% and an operating margin of 16%, which are both fine to me, because you want this number to be above 10%, which they both are. In this chart, we see the margin ratios of Starbucks per year. The overall trend is an increasing margin every year, which is very nice. Of course, in 2020 there was a decrease in margin ratio because of the Roni virus. But right now they are back on track and it's growing from here. So I think this is a very nice thing. They make more profit every year in ratio. Starbucks has a 10% return on assets, which is also fine by me. You want this number to be above 10% again, so it's right there. You want to check this number time to time because it's around the minimum right now. In this chart we see the revenue per quarter and year since 2010. It's growing nice and steady and went down in 2020 because of the coronavirus as discussed before. A lot of the increasing revenues comes from opening new stores as mentioned before. But we also see an increasing in-store sale, so that comforts me a lot. The next thing I want to discuss is the balance sheet. We see that Starbucks has a total cash of $4 billion and a total debt of almost $24 billion. Debt is used by companies to grow, so this isn't really a bad thing in the first place. But it's very important that debt is at a healthy level and that they have enough cash to pay down a big chunk of their debt immediately if necessary. You want the ratio below 5, so for every 5 billion in debt they should have 1 billion in cash. Right now the ratio is at 6, so this is a bit too high in my opinion. But I think this is not that big of a problem. It's almost at a healthy level and the cash on hand is growing every year and especially the last couple of years as we see in this chart. In this chart we see that the long-term debt is decreasing lately, so this also comforts me a lot. Free cash flow is used to pay down debt, but also for other things such as opening new stores, buy back shares, do acquisitions, pay dividends and a lot of other things. It's really important for a company to have an increasing free cash flow every year, which Starbucks has, as we did see a minute ago. So the first two things already covered, the debt and the opening in new stores. The next thing I want to show you are the shares outstanding. You want this number to be decreasing every year because less shares outstanding means your share will become more valuable because the EPS is going up. And also because the less shares that are available. This attracts other investors and drive up the stock price of course. Another great thing about decreasing shares outstanding is that the company has to pay less total amount of dividends because there are less shares quite obviously. This led to easier growth and maintaining of the dividends. In this chart we see that the shares outstanding is going down big time for Starbucks. So you will get a lot of value because of it. Very important to me this one. From here it's a small step to the dividends. Starbucks pays a 2.80% dividend yield and a payout ratio of 56%, which are both really good in my opinion. The 5-year dividend growth rate is almost at 16% and they did grow their dividend for 11 years in a row. Both really impressive. Back in 2015, Starbucks paid a $16 dividend per quarter. Right now, 7 years later, Starbucks pays a $49 dividend per quarter. Almost a triple in dividend growth in 7 years. How nice is that? I think this is something to be proud of as a company. And also something dividend investors really love to see. And also one of the reasons why I bought this company. So, my conclusion is already being given away during this video. I didn't own shares of Starbucks before and I recently opened my position for the first time and I made it my second largest investment so far. The main reason is that I really think this is a great company doing great things and most importantly, selling things that are apparently daily routine for millions of people around the world. I love to see that the US is the biggest revenue stream in terms of location, but that other markets are also growing at really high rates. And there's a lot of room to grow for this company overseas. The stock has come down a lot year to date, 24% to be precise. And right now I think it's the right time to buy Starbucks stock for me. I think whenever the stock is under the $90 at these fundamentals, I will increase my position where I can. The stock price will definitely go up when the company does deliver strong results, so I'm looking forward to the next earnings. From a dividend perspective, this company is a must-have for me. A triple increase in dividends in 7 years is something I really like to see and above all, they are keeping the payout ratio at acceptable levels, so I'm feeling really comfortable owning this stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.